All right, stock market analysis, S&P 500, multiple time frame cycle analysis. I'm going to show you some analysis that has changed somewhat this week, and we'll say that last week I showed analysis that was either negative or very negative, and the analysis that was proven was the analysis that was very negative as the markets broke down through supports today. And that caused us to do some downgrades to remove some of the upper tracks in here that were possible if the market wanted to do better, but that certainly is not the case now as the market weakens. I'm also going to show you our SIR live stream for short-term traders, and I think that's going to be just phenomenally interesting for you on how you can stay on the right side of the big moves. So that's what's really important right now. Let's take a look as we look at the S&P 500. Now, what we're looking at back here is back to 2020, up to the peak that we had around December, January of this year. And that was the COVID-19 pandemic bubble. We got a big move up to historic valuations, 200% to GDP. This, of course, was all the responsible of the Federal Reserve and the government. If you didn't watch the beginning of the show, go back and watch the beginning, because I show you a chart of comparing the high yields, HYG, to the S&P 500, and why that illustrates a lot more trouble for the stock market going forward. So this, of course, was a time frame when the high yields were soaring on the upside along with the stock market, because those zombie stocks, or companies essentially, other companies, benefit from the very low interest rates and money being poured into the economy in a ridiculous way, and all that money then gets spent, and you get these bursts in earnings that just are, it's not sustainable. And that's where we are right now, is that plug is being pulled all around the world, especially by our Fed. Now, if I advance this further in here, you can see where we are right now. So this was that period up to those exceptionally high valuations. You can see the head and shoulders that formed in here. Head and shoulders are formed by the cycle analysis, and if you take our cycle analysis workshop, you will then be able to see the information on how these are formed. If you want to see a video that is just free, that's free and explains cycle analysis, go to our go to the main page at askSlim.com, go to the tab that says workshops, and go to cycle analysis workshop, and there's a great video in there that you'll be able to really understand more about cycle analysis. So on the bottom here are the cycle brackets. Those are just the guides. It's a drawing tool. You could see the minor cycles right in here, the dominant cycles here. Here's where they both came down to a low right over here, and that brought that big selling when they're both in downward motion. Same thing happened in here, but this was a lot of strength in here, so it wasn't able to have a big decline, but this was lower. So in other words, a lower low gets you a lower low, like we have right now. This is not due to bottom out over here until August, September, potentially October. That's in line with what I showed in the beginning of the show, looking at high yields, HYG. Go back and watch that part of the show. This, you can see right in here, is a big failure that we have going on. And that is, when I look at it here on a close-up on the weekly, you can see that what we're looking at is the, let me just make this a little bit easier to see right here. What we're looking at is the decline right over here on this minor cycle, having already come down to near this 78.6 as it's labeled here. We had some potential upper tracks on some of these, but that now sharply reduces the odds of being able to get back up to the level it was. So 41.75 is likely the highest price that we'll see now, though it might try to get up into this white space a little bit right there. This could turn into just a all-out debacle in here and be breaking these lows, and the market would get sold very hard. This low right over here is scheduled for mid-July. So there's this one in here in mid-July. It's very likely going to be below this level at 3,800. And then the next one way out over here takes you out into that September period. And that's where there's this nested bottom in here in line with the monthly cycles. That likely are significant lows. The timing ranges are synced for all indexes over into this period. So September, October is where they all nest, and that's likely where this first important low for the bear market will be. But you can see in here possible bear market projection out into February of 2023, plus or minus a few months either way. So there is a ton of risk still out over here. So we expect to get a rally out here after these declines, and this will be that hook where the illusion comes back of a new bull market, and then it begins to move down again into 2023 as the recessionary possibilities increase, and interest rates are still high, and inflation is still a problem, and all of those, and the rest of the world is still trying to catch up on raising their interest rates, and there's just a lot of risk outside of a window of opportunity for the upside in the fourth quarter of this year. So this points to a breakdown likely going to occur sometime in the next several weeks after maybe some little attempt at rallying back. Let's take a look at the daily chart right in here, and you can see how this now projects. And I want to make a point in here that these upper tracks have now been removed in here, and these harmonics in here were minimally lengthened. We had them at the minor cycle at 11 days, and now we've moved that out to 12. The averages are about 14. The averages are about 12 now. They had been 14 and 14 now these last couple of cycles. So this looks like there's going to be attempted rally early in the week next week. It's come down close to that 78.6%, as you can see right there. And this should be an area that it stops here on this long cycle at 14 days and then tries to move up. But testing the 78.6% means that this next rally will not get as high as this one did. At least the probabilities of that are very low. I will never say never, but it's just low odds. And it's higher odds you'll get a rebound that fails, and then you take out this low again, and the market starts to get sold very hard. This is that daily look at that move down here, and it points to about 3,500 on all of the charts on the S&P 500 out into July, though it doesn't have to be that deep, because this next cycle over here that goes out into late August or early September may be the time that you get it down to 3,500 or maybe 3,200 even. So there is a lot of potential risk. This yellow oval period is really the time when the greatest risk comes. As you see, looking in here, each of those yellow ovals has brought you those big declines. So there's a number of weeks you could get some choppiness in here before you really start to get sold again. But in the meantime, the market is showing you the kind of risk that it has. As the decline here in the last couple days has been very severe. Again, we're looking for this decline in here to stop here in a matter of hours or a day, and then try to move up again. But we don't quite know how deep this is going to be, because the market is in a very negative condition right now. Intraday here. Let's talk about the intraday market. I want to go back in here and look at a slide. We talk about our SIR live stream, which is for short-term traders. This is yesterday. This is on Thursday, and I want you to get the example of what we're looking at in here. Intraday analysis for short-term traders. You get support, resistance, acceleration zone, and the reversal scout, which is this line. Basically, when the line is moving down, it tells you the highest probability is the market will be in a negative trend. These, when it gets through these supports into a yellow zone, the odds are very high it's going to go all the way through the yellow zone. So this is your acceleration areas. And look at 1, 2, 3 acceleration areas in that huge decline. Reversal scout kept you in the right direction. These levels here told you it was likely to accelerate down in a very big way. Here was a little blip in here that might have caught you on the Russell, but then it turned down again in that acceleration zone. So you can get a very good idea looking at that as to the value of using our SIR live stream, stock index report. I actually want to show you this live right now because I want you to see where we are today in this market that's moving down very sharply. So this is the SIR live stream. We're broadcasting this live right now on the askSlim website. and you need to be a level 2, 3, or 4 member. If you didn't see the explanation of this that Avi did just before because you scroll forward or you're watching the clip on YouTube, go back a little bit and you'll be able to see Avi really explain this in a lot of depth. Again, we're looking at the S&P 500, the NASDAQ, and the Russell. This is that reversal scout from yesterday coming down through and where we opened up today in all three of the indexes. And you can see it has been negative and telling you going down through these acceleration zones right in here, and now getting down towards an area where it could likely get some support as it has moved down pretty sharply. That's around 3,900, as you can see there. On the intraday, the bottom of that there is around 38.88. So that's an area where it very well could get some support today, as the S&P 500 has actually given up as much as 115 points at the low today. But you can see in here how it plunges down through those reversal scouts, with the reversal scout guiding you through those acceleration zones, and again, just barely getting into some support right now. That you can see. So this is has been very negative for the last few days and continues to give you that. We'll be looking for the reversal scout to give us an upturn, to give us some sense that the market has bottomed in there. So I wanted you to see this live. This is broadcasting right now live, and you can see the stuff moving on there as everything is changing. And you can have this by becoming a level 2, 3, or 4 members. And member, and make sure that you write to Matt at askSlim.com if you've never been a member and you want to take advantage of that special. So this again is that short term, and looking at the daily chart, we expect to get this upturn in here, which the reversal scout will tell us on that 15-minute chart, at least give us a hint of that, and then likely to get some kind of a bounce into next week. But again, there are real signs that this is much, much worse. And again, we removed those upper brackets and we slightly expanded this out by 1 click as the market is proving to us that it is lengthening out these cycle patterns. So those of you that are our members, you of course understand that. And this could even go to 13 and 39 over here if these downside moves do continue to stretch out. Like you see right over here, rectangle broke down. That was the hint down in this corrective phase, and now we should get a bottoming here right around that 78.6% right over there. Remember, I showed you 38.88 on the 15-minute chart. This is around 38.85, so it's very close. And that would be a spot that would make sense for the market to be able to hold in right now. If it breaks under that and threatens this low over here, and that's at around that 38.08 number, that would be really bad. And the market could be in just total free fall if that happens moving forward over these coming weeks. That is a look at the S&P 500 multiple time frame analysis and a look at our SIR live stream. And that is yesterday, as we showed you, and I hope that you found that fantastic.